Now move forward, continue the topic, the roles and functions of financial markets. Other than general functions of financial markets and institutions, there are some specific functions of financial markets and institutions that plays in an economy. Here you can see that functions of the financial markets. Here you can see these are the functions of the financial markets that plays in an economy. When we look at the saving functions, so look at here, that is the saving functions. Financial market actually provide an avenue for the public's saving. They provide opportunity like through what are their instruments like bonds, stocks, and other financial claims sold in the money and the capital market, and provide accessible liquid investment. So they provide on a relatively low risk to the public savings, for the public savings. The risk is very low actually in the saving functions, which flow through the financial markets into the investments, so that more goods and services can be produced. Actually, these saving functions of the financial markets, it increases productive activities of the economy. So this is the saving functions of the economy, because when the public want to buy some financial instruments, it means that they are saving for themselves. When they play their saving role, then they provide investment to the other institutions who will borrow the money on interest, and they invest into the market. So we are actually trying to understand existing conventional financial markets. So that is why I am using the term of interest. Actually, I'm not going to just explain the Islamic financial markets. No, we are just first of all trying to understand that how conventional financial markets does work. So this is the functions of the financial market in existing conventional financial system. So this is the saving financial system then. Now, wealth function. Actually, the capital markets provides an excellent avenue to store wealth. When we say the store wealth, mean preserve the value of asset we hold. So until funds are needed for spending, that when if we want to spend, then we sell our those instruments. So this user fund is more productive than strong wealth in form of tangible assets, because when we generate our wealth through instrument and we provide our funds to the investors, then and sometimes we have also real assets. We buy real assets like gold, silver, etc., and put in our homes. So it says that uh, these wealth functions financial markets are more productive as compared to those one, because if you keep the real asset in your home, it will be productive, maybe beneficial just for yourself. When you put your money into the financial institutions, it participate in an economy. So these wealth actually is generate activity through bonds, stocks, and other financial instruments do not wear out over time and usually generate income, because when you buy vehicle or other assets, there is depreciation to the cost, but there is no depreciation if you so deposit your money into the financial institutions and generate wealth through them. There is no depreciation cost for you. So this is the wealth function of the financial institutions. When we talk about liquidity function, the capital market provides a means of converting your financial instruments into cash with little risk of loss. And the capital market also provides liquidity for savers who hold financial instrument but are in need of cash, because the capital markets provide them opportunity that they float their shares, and they float also their securities, and they get cash. So who plays this role, facilitative role? Again, this financial markets play their facilitative role. And same as the credit institutions. So in addition to providing liquidity and facilitating the flow of savings into investment to build wealth. The financial markets also furnishes credit to finance consumption and investment spendings. So in this regard, individuals can borrow money to buy properties, or a company can get financing to expand their businesses. Like the credit also, you can say that facility is available through the financial institutions and the markets. And the payments, so same as payment functions, that the financial markets also provide this mechanism for making payments for the purchase of goods and services, as the people who in need of cash to buy some their assets, they visit financial market to the banks institutions or the other institutions that they want to buy the assets. So this again, financial markets provide facility to the public. Then risk protection function, you can say that. So financial markets also offer businesses, consumers, and the uh, government's protection against life, health, and property and income risks. So there are a lot of risks, and these conventional financial institutions, because they do not bear risk, they just provide guaranteed profits. So that is why here risk protection function is also provided by this financial markets. That financial markets offer protection against life, like life insurance, health property, property, so and then the income risks, by permitting individuals and institutions to engage in both risk sharing and risk reduction. So actually financial institutions, they claim that they perform risk sharing, but there is not a risk sharing, there is just only risk transforming, or the risk reduction. Yes, through conventional insurance, there is the concept of risk reduction. And the policy functions, government, particularly the central bank, use financial markets as one of their tool to manage the monetary stability of the country. Through the, for example, if State Bank of Pakistan want to run their monetary policy, expansionary monetary policy, then what they do, they buy their deep treasury bills, and they float money into the public. And if they want to contractionary monetary policy, then they issue the securities and they gather money from the public, and in this way they run their policies to control the inflation, uh, and the fiscal policy and the monetary policy. So again, these financial institutions and markets, through these financial institutions and markets, government and the state banks, central banks, they actually control their policies. तो कहने का मतलब ये है कि ये जो फाइनेंशियल मार्केट्स हैं, ये मल्टी डायमेंशनल, मुख्तलिफ जिहाद किस्म के परफॉर्म करती हैं। आपकी सेविंग्स और इन्वेस्टमेंट इन्हीं इदारों के थ्रू होती है। आप बैंकों के जाके अपना पैसा देते हैं तो इसका मतलब आपने सेव कर दिया, और वही बैंक क्या करेंगे, इन्वेस्टर्स को पैसा इन्वेस्ट करेंगे। ये नहीं जनाब आप पैसा और आप प्रोडक्शन में लगाएं। तो वेल्थ फंक्शन भी इसी को हम कहते हैं कि लोगों को जिनको पैसे जरूरत होती है, वो जाकर वो इंस्टीट्यूशन से पैसा लेते हैं और वो अपनी जनरेट करते हैं, वेल्थ जनरेट करते हैं। मिसाल के तौर पर इन्वेस्ट करेंगे रियल सेक्टर के अंदर वगैरह वगैरह। अच्छा, यही फंक्शन हम कहते हैं कि ये क्रेडिट फंक्शन है। जिनको पैसा चाहिए, लोगों को अपने घर बनाने के लिए, चीज़ों की ज़रूरियात के लिए, क्रेडिट फंक्शन भी आ जाएगा। अच्छा, लिक्विडिटी फंक्शन भी है कि जिनको अगर पैसा मार्केट से उठाना है तो वो कैपिटल मार्केट के अंदर आकर अपने शेयर सेल करेंगे, या वो कोई बॉन्ड सेल करेंगे। अच्छा, इसी तरह पेमेंट फंक्शंस हैं कि आपने कहीं कोई पेमेंट्स करनी है तो आप बोरोइंग कर सकते हैं फाइनेंशियल इंस्टीट्यूशंस के जरिए। रिस्क प्रोटेक्शन फंक्शन है, अगेन यहाँ पर इदारे मौजूद हैं जो आपको गारंटीड प्रॉफिट देते हैं, बल्कि कन्वेंशनल सेक्टर तो सारा चलता ही गारंटीड प्रॉफिट्स के ऊपर है। इसी तरह पॉलिसी है कि गवर्नमेंट ने अगर कोई पॉलिसी बनानी है कि हमने मार्केट के अंदर मनी सप्लाई ज्यादा भेजनी है, मनी सप्लाई कम करनी है, तो ये सारे के सारे फंक्शन जो है ये कौन अदा करता है, ये अगेन जो है ये फाइनेंशियल मार्केट्स का फंक्शन होते हैं।